Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, November 11th. Very appreciative for all the veterans out there, as today is Veterans Day. The market really should be closed on Veterans Day. But it is 5:57 p.m. Eastern Time, and I am coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we are in an uptrend since the O'Neill follow-through days on April 22nd and 23rd, going all the way back to there. There have been a lot of fits and starts lately. As you can see by the trend gauge over here, we've got almost a little too colorful. We prefer the coveted four green arrows. Not quite, but a little bit of improvement from last week as we closed strong on last Friday, gapped up and held yesterday, and weak open today, but some afternoon strength despite a lack of leadership from growth names. Here are the numbers. Leaders neutral with a green sub arrow. Not a good day for leaders today, but most of them still holding above the 21-day moving average. Short term, everything but small caps have had two closes back above the 21-day moving average. So yellow sub arrow there leaning to green. Medium term, trying to get all of the indexes with two closes back above the 50-day moving average. Equal weight and small and mid caps close, but not quite there. Still got the green arrow there, however, and long term. And the market never gets into serious trouble unless the indexes start breaking the long-term 200-day moving average. But we are all green across the board there. So what happened today? As I mentioned, gap down in the morning, but afternoon strength. Got the S&P back to green by the close. Leaders, growth leaders in particular, weak as value stocks really dominated the action today. Here are the numbers. 21 over 21, down an average of 1.64%, only 5 up, 1 neutral, 15 down. The Turbo 12 down an average of 0.5%, 3 up, 8 down. 3 plus 8 is not equal to 12. It was actually 3 up, 9 down. The big 8 basically flat. NVIDIA lagged. Apple led. RG8 down 0.71%. That's an indication of weakness in leadership names, as this is our 8 growth ETF composite. S&P 500 opened down 0.2%, closed up 0.2%. RSP led, however, it was up 0.58%. NASDAQ 100 in the red by 0.33%, but equal weight basically flat. Dow Jones Industrial Average, new all-time highs, up 1.18%. Mid caps basically flat. Russell 2000 small caps basically flat. This was actually up 0.11, so up about 0.1%. Global 60/40 up 0.28%. Our flagship GROTECTION portfolio down about 0.1%. Our more aggressive TurboTection portfolio up about 0.1%. Reminder, we would love it if you would like and subscribe to our social media channels, especially YouTube. Share it, like, subscribe. That helps the algorithms, the algo on YouTube, get our content into the streams of people that are looking for help with their finances. So let's get into it. Here's the S&P 500, and things were looking extremely bleak on Friday with the undercut of the 50-day moving average, but we put in a big hammer. And then over the weekend, a government shutdown basically cleared itself. It hasn't had the final votes yet, but it's really just a formality. Gapped above the 8 and 21-day moving averages. That's great. One close, but we have been having trouble with consecutive good days. We did have the hammer Friday, barely positive. The gap up on Monday, slightly positive move up today. Leaders, however, growth leaders have been spotty. So higher high today on the S&P, still below all-time highs. Two closes above the 8 EMA, two closes above the 21-day. exponential moving average. We're watching this level extremely closely, and uh, the market won't get into, we won't need to be majorly concerned unless we challenge back this 50-day moving average and the lows of that shake day on Friday. Things were looking extremely ugly midday on Friday, and here we are 2.5 days later, and we're challenging new all-time highs. Market, don't ever think you've got the market pegged, because it will make a fool out of you. Let's look at the equal weight S&P, the RSP here. Had been lagging for months, put in some relative strength last week. Also hammered, not as bad a down day on Friday. As you can see, it didn't create separation to the downside the way the market cap did. So a decent day on Friday, just came into resistance at the 21 and the 50-day moving average, but cleared them both today as money flowed into value names. So we want to get another close below that, the stacked moving averages here, the 8, the 21, and the 50. Then we want to see some separation with the 8 coming back up through the 21 and the 50, 21 coming up through the 50. You always want to see your moving averages shorter term above the longer term. The longer the duration, the lower you want them to be in the moving average stack. Let's go to the NASDAQ 100. Relative weakness over the last week and a half, bounce at the 50-day moving average, very similar to the S&P, reclaiming the 21 and 8-day moving averages. Tight inside day today, but just a stone's throw away from all-time highs from back 2 weeks ago. Equal weight NASDAQ 100, QQEW, still below the 21-day moving average, but cleared the 50-day moving average. Dow Jones Industrial Average, all-time highs. Still not the leading index, however, because look at the relative strength line here. This is a value flavored index, and it's dominated by the higher priced stocks because it is price weighted. But these are three very nice candles here, or bars for the Dow. The hammer on Friday, follow through on Tuesday, and the strongest of the indexes today as money flowed into value names, as I mentioned. Mid caps, S&P 400, basically sitting right on the 50-day moving average. Two closes above the 21, but the 21 is still below the 50. Again, we want to get those moving averages configured shortest to longest in duration. And finally, the Russell 2000 has cleared the 50-day moving average. This downtrending 21-day moving average acting as resistance. That's something that needs to clear itself. Big hammer on Friday, as you can see there. So those are the major indexes. Let's go to some inter-asset correlation. We will start with the VIX. VIX down today, 17 handle on the VIX. We're very fine with that. Long-term average is 19 and a half. So obviously we want to be below that, but the lower the better, as you know, in the VIX. We at 17, that still implies over a 1% ATR on the S&P, and the S&P 500 does its best work when that ATR is under 1%. It did drop a little bit today, about 1.2. We'll see that when we get to the tail of the tape. Let's go to the US dollar. Dollar pulling back over the last 4 or 5 sessions, still above the 21-day moving average. Really, this is a big consolidation. We talked about the cup and handle. That's a failed breakout for now. It's back into the base if you want to go by technical patterns there. But the market prefers weakness in the dollar. Gold, big gap up through the 8 and 21-day moving average on Monday, following through not much, but not giving it back, and a strong close to the upside today in gold after a big multi-month relative strength, positive relative strength against the S&P. Then about 2 weeks of extreme weakness. A lot of people called for the top in gold. We're not going to predict, but we did take a position in GROTECTION in GLD today and yesterday in NUGT. The risk reward is just it's just there. Take consolidation about a week and a half here, gapped out of it, gives you a great level to trade against. Let's go to GDX, which Nugget and UGT is the 2 times GDX. Same situation, gap above the 8 and the 21, made a higher high today as well. Silver, SLV, same setup, gapped above the moving averages, made a higher high today. Haven't Crypto has not been performing well. There you see Bitcoin still below the 200-day moving average. ETHA struggling as well, but still above the 200-day. So move on to bonds. Bond prices up slightly today. That means yields pulled back. Here's the broad bond index BND, the long bond TLT price also higher today. So the 30-year yield dropped a bit, and the 10-year yield, well, it's showing it higher. I think we got a bad print here. These close at 259, but yields are down if prices are higher. It's so tight here. Something doesn't look right there. Trust me, the yields dropped. All right, that's it. Let's go to the tail of the tape. The indexes on the stochastics improved with the action on the hammer on Friday and the last 2 days being bullish. 5 of the 6 big indexes that we track are higher. Split along the RG8. NASI is negative. That's a tailwind. Dollars consolidating. Yields are consolidating. Little high here on the stocks above the 5-day moving average. On the S&P, 77% are above, and that's mostly because of the value names where money rotated into today. NASDAQ, 60% of them are above the 5-day moving average. So we would really need some rotation back into growth to see the 77 drop a little bit. Above 80 is a big red flag. Really, we kind of flag it above 75. So that's why this is in red today. Some news: SoftBank, a huge Asian investment bank, announced that they sold their NVIDIA stake. And that was because they wanted to get out of NVIDIA chips and invest more in AI. Now, that really doesn't make sense with NVIDIA being the biggest chip player in providing chips for AI. And that seems like it's something that's a little bit late. You're saying if you want to get into AI just now, after a lot of these names have had big runs and are now pulling back. On the other hand, AMD had a big investor event today, and the CEO, Lisa Su, said she's seeing insatiable AI chip demand. AMD up a bit after hours on that, as they also said their margins were going to be increasing. So you got it from the horse's mouth with Lisa Su, then somebody who's predicting where it should go, dumping their NVIDIA stake. Ultimately, the market will decide. Keys coming into today, S&P against the 21 and all-time highs. It's between the two. So we got the 21 as support, all-time highs as resistance. Same thing with the NASDAQ 100. And the Russell 2000, the 21 and the 50-day is where we're stuck between there. Day count from up 1 to up 2 in the S&P, 2 closes above the 80 MA, 2 closes above the 21 EMA. A lot of tight action intraday today. Really, it was late morning and then lunchtime when we moved higher, and then basing into the close. Here's the ATR of the S&P 1.20. That is down from 1.28 yesterday, and this is a 21-day ATR that we're using. What sector stood today? Biotech, big winner. Oil strong as well. And then value sectors, basic materials, staples, healthcare, and real estate. To the downside, semiconductors, aerospace and defense, and nuclear. Portfolio changes. Yesterday, we bought Nugget in GROTECTION, as I mentioned. We added gold to that as well. Did not take advantage of that last recent move up in gold to the extent that we should have. So that first day gap, I didn't want to wait around on Nugget. And the second day up higher, bought GLD. We've got a nice stop, as I just showed with those lines that I drew when we looked at the GLD chart. Also started BE, that had a big move up on earnings. It's a volatile name, but it's at the bottom of a week and a half tight action. Decent risk reward there. We'll take a look at that chart momentarily. 1.11 adjusted beta, 5.31% balance at risk for GROTECTION. No portfolio changes for TurboTection. 1.22 volatility adjusted beta, 5.63% balance at risk. So the bottom line, early S&P weakness resolved higher despite lagging growth leaders. And the keys for Wednesday, same as the keys for today. On the downside of the Nasdaq the Nasdaq 100 and the S&P 21-day exponential moving average needs support, needs to hold, and then to take a shot at the recent all-time highs. Russell 2000 stuck between that 21-day moving average and the 50-day moving average. All right, let's take a look at our 33 leading names. We'll go through the 21 over 21 first, and then we'll do the Turbo 12. So first up, the names that we own, those are all green flag. There's actually a couple extra names in here. The official 2121, as I buy other things, they get in this list, but I'll tell you what's included and what's not in the calculation. But here's Tesla, stuck between the 21-day and the 50-day moving average. A little bit of a triangle going on here, not showing any relative strength recently, but we want to see that hold that 50-day and get back above the 21. NVIDIA sitting right on the 21-day moving average, down almost 3% today, as I mentioned on that SoftBank story. Halliburton attempted to move out, kind of squatted a bit, pulled back late in the day, but still a higher high since we purchased it. And note the relative strength line as money has been flowing into the oil names. Mongo, tight inside day today after 2 days up off the 21. Snowflake, another tight day as well above the 8 EMA. Paradigm pulling back 3.72%, closing right below the 8-day exponential moving average. This is our largest position, and my expectation is that it will hold plus or minus 2 to 3%. Basically hold the lows from Friday and get back above the 8-day moving average. That's the way leaders act after they do their earnings gap and continue to move higher. They do rest at times, and it's resting right now. But we've noted many times the strongest stocks will trend above the 8-day moving average in a good market. There's GDX, which we bought. Nugget. There's BE, which we bought today. So here's the earnings gap on it. And I love the numbers on this. 83 and 94% growth for 2025 and 2026. Yes, it's expensive, but they are making money. And a nice 2-week, a little over 2-week tight base forming here. Did break below the 8 EMA, similar to what Teradyne did. But the 21 is below, and that's where I sized it against. The 21 and the lows from Friday should hold. If they don't, then there's either something wrong with BE or something wrong with the market that's trickling over to BE. There's GLD, which we added 5% position today. There's Nugget. I mentioned that as well. That's how we play GDX. I don't actually need that in here. Always use the underlying when you're setting your stops, because don't use the derivative. That goes for the indexes as well. You don't look at a chart of SQQQ. You look at a chart of the Qs. You don't look at a chart of UPRO. You look at a chart of the S&P to make your decisions. All right, here's what we don't own, but these are still all looking fine. CrowdStrike continues to show relative strength, right at new highs. Micron pulling back, has been riding the 8 EMA higher. First Solar strength, but pulled back today. Light getting pretty volatile since its move up on earnings, but absolute strength there and great numbers. Credo first closed below the 21 today. We want to see that regain the 8 and the 21. CLS, Celestica, tight action after its shakeout on Friday. RTX, continued tight action about 3 weeks now since its earnings gap. AMD, you can see it's up 4% after hours after holding the 21 today, so good action there. Palantir regained the 21-day moving average after a brutal shakeout after earnings last week. Corning tight above the 21. VRT slight close below the 21. SoFi shakeout last week, regained the 21 Monday, holding it today. Eli Lilly clearing this long flat base Good stuff there. Great volume patterns. We're looking for a low risk entry into this, and CCJ just below the 21-day moving average. Turbo 12, let's sort them by what did the best today. LabU, and this was really the reason why the uh, the Turbo 12 was stronger today versus the 21 over 21 list. What a nice move here in biotech names. That's a breakout after relative strength that's been shown. Kind of weird from the standpoint that normally these move in sync with the small cap index, but there's some decoupling here. This is far outperforming the IWM. Xpeng breaking out of this base, not on earnings. They've got earnings next week, but they some stories about how they are challenging Tesla for the humanoid robot global lead is led to a lot of money flowing into this 3 of the last 4 days. SanDisk continues to just be an absolute champ. TMDX sitting right around the 21-day moving average, not the best reaction post earnings. Guardant Health, great earnings reaction, riding the 8 EMA higher. Southern Copper continues to ride the 21 higher. REMX, this is rare earths. They've pulled back hard, broke the 50-day, and then very similar to gold, had a gap up back above the 8 and the 21. Let's see if that continues to hold. Decent low risk entry there if you're inclined. Sedge, solars have been strong. Big move up on earnings, 2-day consolidation, higher yesterday, inside day today. That looks fantastic. EOSE battery company breaking a nice downtrend line there. Look at the volume coming in over 3 days prior to today. Tight consolidation today. Uh, really nice looking chart there. IREN breaking the 21-day moving average, so not so good there after its earnings report. FLNC Fluence Energy bouncing at the 21-day. And actually, why do I have okay, no, yes, BE is not in the 2121 list. It's actually a Turbo 12 name. I had it in the 2121 because I bought it today, and I already drew the lines explaining why I bought it. So there we are with Bloom Energy. Those are our 33 leading names. Most of our buys come from these lists. So we keep a close eye on them, and that's why we share them with everybody. And with that, I'll wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, hit the contact us out on our website. And we will get back with you with some summary information and then a brief chat to determine if we're going to make good partners or not. And reminder, it's not how much you make in the market, it's how much you can keep. Both our flagship GROTECTION portfolio and its more aggressive cousin TurboTection, they're designed to make money during uptrends and protect your money during downtrends, growth and protection. And we talk about it every night here on video. Most transparent advisor that you will find. All portfolio changes, full explanation of what we're seeing in the market. What more could you ask for? And with that, I will wrap it for Tuesday, November 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.